What's going on, everybody? Michael Silva here. Look, gold has been performing very well since late March of this year, and in today's video, I'm going to discuss the 3 reasons why I've been buying not only gold, but silver and the miners. Without further ado, let's just get into today's episode. Welcome back. We're hopping right into it. The very first reason, simply put, is the national debt. This is the U.S. debt clock, and if you look right here to the left, the U.S. national debt, notice here how the debt is increasing by the millions per minute. Insane. This is the M2 money supply. It is up over 25% in just over 1 year. The Fed's fund rate is smashed down to its lowest levels seen since previously in the great financial crisis. It encourages borrowing. What it doesn't encourage is savings. See, in this environment, savers are losers, ones that save dollars, that is. Now, with interest rates being so low, why not approach a $6 trillion plan? The Biden administration just recently announced this. Mitch McConnell is a Republican leader, and he stated this would drown American families in debt, deficits, and inflation. But hey, money's cheap. Let's spend it. At least that's the message that the White House is giving, right? But no need to worry. Janet Yellen, she says the Biden budget will push U.S. debt higher, but not to worry about inflation. Second reason why I have been buying gold, miners, and various precious metals is inflation. On June 10th, we're gonna have the CPI numbers released. The forecast is 3.4%. Even if we hit the 3.4 forecast, that is gonna put us at a CPI that we haven't seen in over 25 years. The mentions of inflations on calls have jumped over 800% so far, pointing to higher inflation. You can see here in the light blue line, that's mentions of inflation. This is coming from B of A Global Research, and in the dark blue line is the CPI year over year, and you can see they track well, actually, just by looking at these numbers, and we've recently seen a large spike here in just the mentions. You're seeing things like various commodities, lumber, completely vertical, wheat, completely vertical, corn, completely vertical, copper, completely vertical, oil is going completely vertical. So inflation is here. It is taking place. The way that they measure it is differently than what the regular consumer might be feeling, but it does seem that inflation will play a key role in the rise of gold. The third reason is the United States dollar. As we're printing more and more dollars into existence, that makes the value of them less. We can pull a chart of the US dollar and you can see it's been consolidating here since around 2015. It's sitting at a very, very key level, and that is just above 88. You can see it acted as resistance here, and then once resistance is broken, it can become support. Now, if we break through that key level and hold it, there's really no support underneath us until we drop to 84. A dollar drop like that can really shoot the precious metals up higher, and that can also benefit various miners. If we scope out to a longer time frame, we're dating back to all the way to 81. I want to point out a couple key important trend lines and why they're important. So if we called out this channel, but you can also point out that this has been in a trend line since 2011, and it recently broke down here in mid-2020. So one has to ask, is this a potential head and shoulders pattern? You can see here a left shoulder ahead, a right shoulder, and we crack through that neckline. So yeah, maybe we might come back, test it, and then head lower. But is it going to play out a very similar scenario that we saw here right to around 2002 is when we finally cracked down from that? So is this a repeat of this where we might continue to head lower? If that is the case, well, gold looks very good. And we can look at the ratio from commodities to the S&P 500 on a long-term basis. This right here, when the line goes down, that means commodities are severely undervalued to equities. And where do we go right here around March 2020? We were at basically an all-time low right here. According to this specific chart, this is when I started acquiring heavier purchases around gold, silver, and various miners. You can see here when the price goes way up here, that means commodities are overvalued. You can see during the oil embargo, the Gulf War, and the global financial crisis. When we look at a chart of gold on a long-term time frame, you can see this large cup and handle pattern, and we recently are making the attempt to break out of its handle formation right here. We have the purple line is the 5-month moving average, and it is inclining. So this so far is a very good look. Now miners, this is an important play. Higher risk can equal higher reward. These have recently also broken out on the weekly time frame, and the moving averages are all trending up. This is a very, very good sign and early start to a potential large rally in not only gold, but silver, miners, and the junior miners. So those are the 3 reasons. Once again, we have the national debt, we have inflation, and the breaking down of the US dollar. All points to sign to higher prices in gold, silver, and the miners. Today's video, I partnered with Gold Mountain. This is British Columbia's next gold producer. They trade on the TSX.V under GMTN, and they trade in the US market as well, GMTNF. Unlocking the unique potential of British Columbia's highly prospective resource district is a gold producer with deep mineral resources led by veteran mining operators and executives. Now that we're on the cusp of a historic commodity bull market, Gold Mountain has the asset, the leadership, and the operating plan to execute its vision of becoming a predominant gold producer in the Canadian mining space. Through strategic partnerships and a unique ultra-low capex model, Gold Mountain is poised to be British Columbia's next high-grade gold and silver producer. Gold Mountain has 100% interest in the Elk Gold project, acquired from Equinox on May 16, 2019 for just $10 million at 10% down and 0% interest. That means that Gold Mountain acquired this soon-to-be operational mine for only $18 an ounce of gold. These properties usually go over for $150 an ounce. That's like buying at 5 cents on the dollar. A lot of work has been done by the previous owners. They spent $60 million in today's replacement cost on it. It requires some significant negotiating skills to be able to close a deal like that. Gold Mountain's management team possesses decades of specialized experience. The team has helped advance more than 15 mines into production and has collectively raised more than $30 million in the capital markets. Gold Mountain's executive team and its affiliates hold 32% of the company, bringing confidence to the shareholders and ensuring that Gold Mountain's leadership team is aligned. Tookie Angus is the chairman of K92 Mining, one of the best performing companies of the past decade, and he is the strategic advisor. Quinton, he's from Newfound Gold, which just rallied over 600% in the past 10 months. He is another strategic advisor. It is truly an incredible team leading the charge. A preliminary economic assessment from August 2020 determined a net present value of 191 million Canadian dollars at a 5% discount rate, assuming a long-term gold price of $1,600. Now, most gold bulls expect the per ounce of gold price to run much higher than that. Now, once again, I want to reiterate, they paid $10 million in total for this project, out of which only $1 million was the down payment. That same preliminary economic assessment also found that from 4 to 10 years of the mine life, Elk Gold's project forecasted production will be 50,000 ounces per year at an AISC, all-in sustaining costs of just $735 per gold ounce. With such a low cost to get gold out of the ground, it's almost unheard of in the industry, but again, it's all part of the Gold Mountain executive team's commitment of unwavering cost efficiency and shareholder value. They will be getting gold out of the ground for lower than $800 an ounce. This means that their profits are going to be more than 100%. Now, there are very few companies that are about to begin production in 2021. Gold Mountain is one of them. By November, they will be producing according to plan. That's a big deal. Full-scale production is scheduled for the fourth quarter of 2024, targeting 100,000 ounces per year and consisting of hybrid, high-grade, multiple open pit and underground operation with the Elk Gold property. This isn't the only insane part of acquiring this project. The previous owners have spent so much on it that the development plan is really low for Gold Mountain. Most of the costs have already been made. All of the infrastructure and mine permitting in place in today's dollars would be somewhere in the neighborhood of $50 to $60 million to recreate. New Gold, a $1.5 billion company, is Gold Mountain's partner in this project. And in terms of milling, their facility is designed to process 18,000 metric tons per day, but they don't have the gold grades to ramp up 11,000 metric tons per day. With that information, another sweet deal was signed. Zero cost of processing. Gold Mountain keeps 89% and New Gold gets 11%. And when the ore is delivered to the site, they have 17 days to pay. All risk of recovery and all risk of selling to market and carrying costs are deferred to New Gold, while Gold Mountain ends up with an ultra low capex startup with the amazing cash flow turnover. As already discussed, the Elk Gold project's mine production profile starts with roughly 19,000 ounces per year, with the eventual goal of ramping up to 100,000 ounces per year and never losing sight of the million-ounce milestone. Now I want to go ahead and take a look at their chart. I'm a technical analyst. I like to look at the charts. Here it is, GMTNF. And you can see here, it just recently reached an all-time high with some big volume coming in as of recently. This is just it just recently started trading in the US, and you can see there's some previous resistance we broke out of right at 2.23. On the weekly time frame, we just had a record week setting in volume, 1.7 million shares traded. So it's not the most liquid as of now, but as the company gets more and more known, that story can change. So we did break out of this little pennant formation, so it's a pretty strong move there so far to the upside. All right, everybody, that's all I have for you. If you want to learn more about Gold Mountain, I left the link in the description to their website. I highly recommend just clicking on the link and looking around and doing the research for yourself. Have a wonderful day.